Listening to the word coming in from Pushkar Johari, the MD and head private equity at Valuequest, as he shares his insight into market dynamics and how Indian companies stack up against their global counterparts. Let's go across and listen in.
When we look at portfolio construction from a private equity lens, what I'd like to do is a bit of risk diversification. So I'd like to take exposure to energy transition, but I'd also like to take exposure to other sectors which can create significant value for investors. So our lens on tech-driven businesses is that our shopping behavior is changing, our own habits in terms of we are embracing technology a lot more strongly, whether you see that in terms of our shopping behavior or in terms of how we are consuming products, both from a B2B and a B2C lens. And there are technology businesses which are now maturing very nicely, and they're building very unique businesses which are challenging the incumbents. Similarly, on aerospace, we have found some very interesting businesses. We've invested in two such companies. One is investment in a company called Unimec, which is focused on civilian aerospace, and they make tools and components for aircraft engine repair and maintenance.
I want to understand in cricket terminology, what is your assessment in terms of areas of growth, where you see 2020 kind of growth, which are the pockets where test match kind of growth can happen, and mix of both ODI kind of a thing. If you can identify these three buckets for us.
See, private equity, I would say, is more like one day to a test match, right? You need
longer
businesses
innings
to grow
yes.
strongly, but you need them to grow for a long period of time.
Right.
Our hold periods are typically longer. Classic private equity deal, growth stage, you'd want to hold for about 5 years. So you want to see that value creation happen year after year after year, right? So if you're going to own a company for 5 years or 20 quarters, it's not that every quarter will be a great quarter, but by and large, most of the quarters you want to invest in businesses which give them the best chance of growing solidly, creating value over long periods of time. So I think we are more from a cricket parlance, more test match and one-day players. I think for us, it's not about making a quick buck. So to give you an analogy, if I have two investment ideas, one in which I can make 50% upside in a year versus one where I can make 25% upside sustainably over every year over the next 3 to 4 years, I would go for the latter over the former, because what happens after that 1 year upside? I would have to sell, and then for the next few years, I may not get that kind of growth. So private equity is taking a long lens on businesses and sectors and seeing that those businesses are able to stay stronger for longer.
Okay, that's the word coming in from the top boss at Valuequest.